going to be a very interesting panel discussion on the risks, the security features. As far as the insurance companies are concerned, they say that they cover the risk aspects as well as the security of every human being, whether it's a property risk or it's a life risk. It's time for us to really look at what exactly are the insurers doing for themselves and what is that the world needs today as far as innovation is concerned. So that my question to you is, insurance companies are giving, they say, pin to play in all the covers. But do you feel there are a lot of innovation that needs to be done? And what are the risks presently are not covered for commercial insurance by the insurance companies in India?
There is a need to innovate and there is a need to offer better risk cover, covering all the risks. So, of course, life insurance companies cover life insurance risk, pension, then child, then post-death covers, and also critical illness, sickness, because you're allowed to cover, offer health insurance policies also along with the life insurance or health cover, not insurance. So, there is a fair amount of coverage on the life insurance side, on retirement, child, death, everything, all aspects of human life. But having said that, there is a greater need to innovate. Like, for instance, indemnity insurance is something you should be allowed. So it's allowed as a additional risk cover or a additional policy to the main policy and things like that. Depends on the file and use of the products. So I think what has been done now is to remove the file and use and allow use and file, allow innovation, leaving it up to the appointed actuary. But still there is a lot of reinsurance regulation, there is a lot of cover, there is a lot of modeling that gets checked. So there is that ambit of scope decrease. Insurance companies at the moment in the country are thriving and trying to come out of that and offer more and more innovative products and innovations. Yeah. So from the commercial side also, again, you would have, like for instance, reputation risk we need to cover. Do you have a very good policy to cover reputation risk? I'm not sure how it's covered and what it's there somewhere in loss of insurance and goodwill loss, etc. on account of a disaster. Again, catastrophe side, again, are you covering all catastrophes is a question mark. I presented a paper in Singapore on catastrophe risk and find that compared to what the advanced countries are in that space, we have not yet reached that stage yet. Data is a challenge again. You need data, you need rationalization of data, you need to have adequacy of data in terms of what needs to be covered and what needs to be counted. So given all these challenges on data side, on infrastructure side, on the adequacy is not good enough, but changes are happening and changes are happening and regulations are changing.
Thank you, Sundar. Last 1 year, I have been working for a technology company which is consulting for a British insurer, and they have a specialty lines insurance company in US. They give a cover exclusively for war. When I take any policy in the Indian market, they say war is an excluded peril. Whereas I find this company boldly giving. So what's your take on that?
You know, the biggest thing when we talk about, I think, the wish list, I think we were just chatting, Sundar and me also kind of had a chat that we can have a laundry list of requirements. So I'll come on to the war part, but I'm just giving a little background to, what probably Sundar said. So I think, very, very critical, which we kind of see as a part of general insurance, there's a lot of innovation which has primarily happened on the retail aspect of products. And I think with the current regulator and the positive mindset in terms of the speed and accuracy which we've seen, the guidelines have changed from file as used to use and file, which is like a bigger thing. You create a product, use it. I think that's one thing which has given a lot of flexibility to the insurance companies. Coming on to the wishful thinking, obviously there are mega risks and transmission risk. Like, we have these larger transmission lines which give a cover of about 100, 200 crores and not beyond, wherein the risk runs into thousands of crores. So still, insurance companies are struggling to kind of achieve and reach to that parameter. A. B, I think when it comes to war, like, Ravi was asking, so I think, again, landed assets during the wars, again, you need a lot of maturity to kind of give coverage to those. Like, especially if I really recollect, since you've shared that 1971 war, where the Honorable Prime Minister kind of took a call that all the landed losses which have happened will be borne by the government. Obviously, insurance companies were not in a position to take those kind of losses on their net. And secondly, the biggest challenge is getting reinsurance support. Because today, you do not have that kind of capacity that you start taking such larger risks, because the impact could run into thousands and lakhs of crores. More so, I think, we talk about multi-chain supply chain solutions. Today, it is restricted to one level of change, like your raw material supplier or probably your finished goods supplier, but the entire chain, you're not able to give an assurance to. Performance guarantees. We all talk about qualitative risks when we talk. Performance guarantee is something that suppose, I as a dealer deal with you to give me a certain specific skill of steel or a grade of steel to be produced. If that grade reduces, will the insurance company pay? I mean, such are the kind of things like we were just discussing, parametric products in property. Now, that's a very, very big line. The regulator has been asking to increase the penetration of insurance. Now, how do you really do that? Not by reaching the classes. Classes are already tapped reasonably. How do we reach the masses? Now, the small idea which I'll just probably share with you guys, which we are internally deliberating, and as an industry we are deliberating, is, simple thing. Parametric insurance is basically an incidence-based coverage which is given. Simply like, say, a weather cover. Suppose there is an X level of rain which we kind of face, so a kind of amount would be paid to the beneficiary. We see a lot of street vendors. Do we? Yes. Your vegetable vendors, your pani puri walas, and so on and so forth. Ek din barish ho jati hai, they are out of business. What about their loss of profit? Can we really come up with government a kind of a standard product whereby a small amount of premium is taken, and if there is a rain, say of 10 20 in a city, an X amount is straight away credited to that guy's account. Would he not be interested in something like that? And I'm sure the entire country would applaud such kind of products. So I think, we can keep discussing on the range of products and what we can really do in general insurance. Huge opportunity. I think stock throughput losses, loss limits in SME segments. I think I can talk about 100 ideas which we kind of, deliberate, and we try to kind of, see how the business viability comes in. Because I think last but not the least, your cyber insurance. Everybody today is talking cyber insurance. But tell me one company which completely exhaustively gives us business interruption cover in cyber insurance. Which gives us property damage. They say कि ठीक है हम वो malware attack हो गया, we will pay the whatever ransom money. But that amount is a separate amount. What about business running out of due to cyber attacks? How does that organization survive? Can insurance companies really take care of those losses? So it's a lot of deliberation, which I think as not just in India, but globally with reinsurers, a lot of brainstorming is happening. And I see a lot of changes which are positive happening across the industry. With last thing, which I'll just point across is the health insurance segment. After COVID, all of us have seen a paradigm change in health insurance mindset with a lot of unique covers coming in. Simple like, yeah, your OPD covers in, your policies. Nobody could have thought how, a private insurance company would offer an OPD cover like a CGHS or a NHS or something like that. But today that is happening. It has begun. I wouldn't say it has reached a peak level. Still, the limits are so small that you are not free as if, as an income taxpayer today, I believe that I should kind of be given a free treatment or a HNI treatment. So now government is trying to bring ABHA number, which is Ayush Bharat, number which would be assigned to you, which can eventually change the entire industry. Your entire medical history is online. You go to a pharmacy, he can see what all treatments you've taken. You go to a doctor, he knows your history. So all your, pre-existing misrepresentations on the fraud aspect also get controlled. So I think good days ahead. Let's hope for the best.
Yeah, thank you, Jaspreet, for the wonderful explanation of the new innovations that are taking place. Getting back to risk and cyber, I would like to ask this question to Manoj. Manoj, you are in the cyber security, you are the Chief Information Security Officer. Today, when the world is developing into a digital economy, especially the regulator is now freeing a lot of things to make insurance accessible to everyone. With the digital India space, what are the cyber risks that you foresee as a company when everybody can access your central server? So what is the security that you are looking at?
When it comes to cyber risk, so it's very vast in nature, and I think it has to be associated with some numbers, which normally the leadership talks about, and the number is nothing but in terms of Indian rupees. I mean, if I have some services available to customers online, there are two types of risk. One, if the service is not available for certain time, there may be some business loss. And definitely the organization will have two types of plan. One is service continuity plan and another one is business continuity plan. But because of that service, if some damage is happening to organization, then there will be, various type of risk involved, like reputation risk, financial risk because of penalties or loss of business, and definitely there will be some kind of, compliance risk. So someone in the organization, primarily it's a CISO, they should do some kind of analysis of, the risk, and not in terms of qualitative but quantitative. It should be, matched with some number. Like if something goes down, then certain amount can be treated as impact for the organization, and those stress scenarios can correlate with solvency of the organization. In worst case scenario, this may hit my solvency level, maybe hard limit or soft limit, and in case solvency is impacted at certain time, additional working capital is required or not. I mean, the basic problem, Ravi sir, is, if two parties are communicating, both should understand their language. Normally, leadership and board, they understand business language, and CISO, they talk about, technology and hyper-convergence. Right. So, the solvency, additional working capital, okay, in worst case scenario, there may be a chance of 100 crore of additional working capital, and to reduce that risk, maybe additional budget of information security required of 10 crores to bring down the probability of risk to 80%.
As the insurance companies always proudly say that we cover the risk of all technology companies for their liability, cyber liability, we'll give the data identity theft, all these insurance covers, insurance companies give to technology companies. Now, according to you, what technology company should give it to you to protect your interest? So how technology can help in fraud prevention?
One, fraud in the insurance industry remains the same over ages. Like you find fake debts, you find misappropriation of cash, you find misrepresentation of material facts, you could find forgery of documents. Those things remain as is. It continues. However, there are red flags built by each company where they have an identification, early identification mechanism so that they can prevent it from recurrence. However, with the advancement of technology, what we are seeing is more of computer-based frauds. Biggest threat that the industry is now facing is an identity threat. Like you have identity thefts, and many insurance companies are facing it because data theft is one of the biggest threats which technology has posed to the insurance companies. Apart from that, malware attack that I know many of the banking industries and the financial sectors and even in the insurance space saw malware attacks during the COVID regime. And the biggest, worst part of the malware attacks is I do not think we have the maturity to come back and recover with speed to the extent we lose the data or the damage caused to critical infrastructure. So I think fraud has only increased manifold with technology. However, having said that, technology is also a boon because you have a lot of artificial intelligence, machine learning. Your blockchain technology itself is a great boon to you. You can analyze data and find out and, apply the early principles of identification, IMMR as we call,
Right.
identify, measure, monitor, mitigate,
monitor.
and then report.
Right.
So I think that's a tool which every insurer should adopt, every company should adopt. In fact, it's for all the financial entities to take care of it. Because fraud is not going to reduce in the insurance industry. How vigilant we are, how we are able to cope up, the speed and the agility of the entities is more important here.
Yeah, so
Yeah.
I think what has taken off the last 10 years or 12 years is the analytics space. What technology companies have provided to insurance companies is with analytics and measurement of the risk. So by measuring risk vis-a-vis various categories, I mean, it could be, our system used to do 36 categories. Now you put many combos and increased it even further categories. These could be like, housewife taking a phenomenal insurance or an occupation being shown as business, but we don't know what business is that. Like for instance, you have a drunkard cobbler or a shoe cutter being shown as a dealer in shoes. And you think it's a Dawood or some fancy, but then we found that it's a drunkard with bones visible in the photograph. So these dashboards and analytics produce various results, and you're able to beforehand predict that this insurance policy will likely to result into a claim, or this insurance policy will not give persistency. This insurance policy is fraudulent. That kind of data you get today using
Right.
analytics. Now we use SAS.
Right.
Exactly, they're able to tell you probability of what the claim is likely to be. And we're able to do investigations, get the real data, and cancel the policy. Those clauses are there in the insurance policy. If you give fraudulent information, we have a right to cancel the policy and forfeit
correct.
premium. This is what is giving lots of savings, and I think technology companies have helped us a lot. I think there's going to be increasing use of technology, dashboards, and analytics, and AI and machine learning.
Yeah. What are the types of frauds you expect to come in the days to come, and how do you expect to handle those cyber?
Well, I think we already heard a couple of frauds in terms of the identity theft,
Yep.
in terms of financial perspective documents, or even the debt certificates, claims perspective. So I'll talk about solutions. I think
Yep.
we almost discussed a lot on the problems. So while we see, and these largely comes from the intermediary channels, if you look at where there is a lot of assistance which has been provided. But since the pandemic or the technology evolution in this space, most of the journeys are getting into the non-assisted way. So which really covers up most of the aspects in terms of the KYC or the fraud or the underwriting medical perspective. So a couple of things is what Aegon Life has done a shift. I will not, and it's a fundamental shift, and it's not a small tweak, I would say, is where we are talking about zero documentations, a completely non-assisted way of doing business. So in terms of, from the identity theft perspective, we look at selfie video for that matter, which really gives us in terms of, and which is inbuilt into the algorithms which we have built in, which really gives the liveliness of the prospects or the customer perspective. Post that, we also look at in terms of the documentation list. So zero documentation is what we talk about, where we, like Sundar spoken about, there are government and semi-government data sources which comes, which really gives us, so we do an hypothesis around the customer's perspective. There is a concept called shift left, and that's something what we do out over here as well. If you are doing the right screening at the beginning, I think the majority of the frauds have been covered. And with this model, we are able to put down our frauds. I would say 85% of the reduction in the frauds is what we have seen with this model really working for that matter.
What are the type of frauds that you have come across, and how do you now propose to handle? Because you have been in sales, you know what the sales guys will do. Now, how do you see the markets today?
Okay, I'll try as much as possible to stay away from any insurance jargon.
Yeah.
Okay, and let's try to look at this in, see, all of this is crime, right? When we think of crime, the very, very petty crime, let's say, is pickpocket. And a very evolved crime maybe is dacoity, okay, plundering, okay? So I'll try to equate it to that. somebody trying to say that, my 10-year product is actually a 1-year product and doing some kind of a mis-sell, as it is called, that is like a pickpocket. Okay, somebody selling selling or buying, it could be both. Somebody going out and selling a policy of a person who's already dead, or of a person who doesn't know that a policy is bought for him, or somebody in the click world going and clicking and buying for somebody else.
Yes, yeah.
Okay, I'm just a combination of what we spoke of, impersonation and and all of that is akin to, let's say, a dacoity. Okay, so in the former, this used to happen earlier as well. It's just the modus which has changed. Vijaya mentioned, that frauds were there and are there and will be there. So the modus has changed. But the modus has changed and, it has exploded. Today, a person in the brick world could only do as much. Okay, the impact which, that person could create was limited. So, what would you need to do to magnify? You need to enhance the incidence.
Right.
Okay, incidence into impact is what will have your impact on your risk,
Agree, yeah,
right?
yeah.
So you either you can't do too much on incidence and you can't do too much on impact. The overall effect is low. But now with you can do both in the digital world. You can dramatically increase the incidence, okay, by rampant impersonation. Or you can go deep and enhance the impact.
One question to just make. Now, every insurer is saying that I am covering the risk insecurity of everybody. My question to you is, are these insurance companies insuring their risks with somebody? Because, see, forget reinsurance is something which you do. I'm having a reputation risk, I'm having a solvency risk, I'm having different type of risks which the insurance companies are exposed to. Or do they take sufficient cover for their risks?
So, okay, before I come on to that, I'll just add on to the previous question. I was wanting to just add a small point to that. So, we all discussed about technology risks and frauds per se, which is one of my very, very close topics to my heart. So, I couldn't resist to take maybe a minute or two on that. So, I think, whatever points you've discussed, very, very relevant from a cyber security or a fraud perspective, from an impersonation or a life insurance perspective, where we know the sum insured at least. I think we come from an industry where we have one product which is called as third party, which has unlimited liability. So imagine the world we are sailing in. And, right now we are talking about an insured or an intermediary doing fraud with us. Imagine a third party who could be anybody, who could be an hospital, who could be a postmortem doctor, who could be a third party claimant, who could be a lawyer, who could be anybody in the world creating that fraud against you, and the liability running in not just 1,000 lakhs, but in multiple crores, depending on the profile of the person. So I think that is the world we are living in. While we all have developed some or the other way, we have tried to cover things with technology, but at the end of the day, there is a lot of redundancy, a lot of dependency on the authorities, on the machinery which is today running. Because, an accident which happens 5 years ago, while there is a new Motor Vehicle Act which has come in, we all are aware that there is a limitation and things which have come in, but still 6 months is a large period to really create documents, create, an entire incident, and then eventually go and claim in the MSCT courts. So how do you really kind of, tackle to those kind of frauds and eventually save those crores? Because mind you, there are very limited reinsurers also available to kind of cover you on that. So that's a food for thought which, all of us are deliberating. We are developing a lot of data around it. In fact, on the health side, let me say that I think one thing which I very, very proudly kind of, speak about, as an organization, we've created nano macro analysis, which is nothing but, going to the medicine level, where the data can tell you that the treatment and the medicine really correlates well with each other or not, or whether the hospitals have exaggerated the medicines or exaggerated the length of stay, the vaccination, so on and so forth, so as to kind of, do a bogus claim or an exaggerated claim. So I think data analysis, machine learning, automation is the basic now. I wouldn't say that's something which is, obviously there will be advancements, there will be next level of developments which will happen, and eventually, they would be taken care of. Coming on to your question, Ravi, I think insurance companies, yes, I would say they are very, very sensitive towards the risk because they understand the variety of claims which kind of come in, and they kind of look at their introspections and they do insure. Yes, there is a lot of room for improvement because every premium going out is again a P&L hit and it's a cost. So you have to balance between how much you really want to cover yourself and what is the right set of covers. Obviously, for your business risks, you have reinsurance supports, which you adequately kind of take to ensure that your business does not run out of risk. But yes, a D&O policy, which is directors and officers liability, your fire insurances, your employees' health safety. I think these things, as an organization, you overtake care of. So you'll be surprised that we've not just covered our employees, but their extended family, their parents also, their children, their spouses, and even in-laws. So, you kind of are trying to raise that umbrella to that extent that your employee does not really kind of, is left around. At least you're there, if not emotionally, financially, to help him.
Just one answer from each and every one of you. Just it should be only one sentence, not more than that, because basically I'm a quiz master, so I understand these things. We'll start with Vijay Lakshmi, and everybody, it's the same question. A lot of things are happening on the regulatory front. And what is that as a chief compliance officer or a chief risk officer? What is your expectation from the regulator? Yes, Vijay Lakshmi, start with you first. Yeah, please, use the mic, please.
Yeah. So I think the regulator is very prescriptive while saying that every company must have a risk management framework, you should have board-approved risk policies, you must have a chief risk officer. But I think what they could come around is have a uniform or standardization of risk playbook, a risk register, so that all of us within the industry, be it general, life or health, are able to think risk in the same manner. Now each of us is thinking risk as we perceive it in our own mind, or as our group practices lay, or the market practices that we have learned.
Yeah, thanks, Vijay Lakshmi. So she is talking about standardization of risk practices, risk registers. Yes.
Yeah, so first of all, thanks to regulator, at least they are bringing in some kind of framework to the organization for standardization, and the regulation or guidelines should be practical enough, to be responded by the organizations.
Yeah, thank you, Manoj. Yeah, that's right. Yeah.
Quick one word. We need a dedicated fraud investigation bureau. Simply saying that ultimately police is too busy in investigating murders and rapes. We need somebody like a FIU or a specific fraud investigation bureau for insurance industry.
Thanks, Yasmin. Yeah, Sundar.
Regulatory compliance, I would equate it to risk management at a country level. What regulation is basically tolerance limits which have been put down by the regulator. As we mature as a market, the expectation, and it's in some way happening, is when the micro entity, which is the company, strengthens its risk management framework, the country risk management framework relaxes. Okay, so that's what I would see as an expectation.
Fantastic. Thank you so much. Yeah.
I'll try to keep it short. So, largely, if you look at the penetration, if you want to really increase the penetration, we really need now regulation should follow the innovation.
Right.
So, I think that will really be a mantra for ahead for us.
Yeah, thanks, Kiran. Yeah. Yes, Sundar?
Yeah, I think what the regulator is trying is to increase penetration from 2% to 3% to 6%. And in 5 years or so. So which means that there will be a lot of systemic risks that would be there in 2 to 3 years' time. And so we need to have a effective risk management, enterprise management, and country level systemic risk management framework.
Yeah.
Apart from various other bottled down frameworks.
Of course, all of us expect a lot of things from the regulator. And then today, if you look at the insurance market, it's expanding in the fastest way. The industry which is really developing in a big way in India is insurance and across the globe also. Yes, hopefully all our dreams come true. Thank you, eminent panelists, for your wonderful thoughts. And thank you so much, Vijay Lakshmi, Manoj, Jaspreet, Kiran, Sundar Natarajan, and Sundar Krishan, for your valuable thought. Thank you, Banking Frontiers, for giving me the opportunity. Thank you, audience, for the patient listening.
And